how Trump's grand legislation could impact you. President Donald Trump has managed to secure approval for a substantial $3.4 trillion legislative package, packed with new tax incentives, reductions in government spending, and additional funds allocated towards defense and immigration enforcement. Despite concerns raised by fiscal conservatives about the potential $4 trillion addition this might make to the national debt within the coming decade, Trump has achieved what he famously calls his big, beautiful bill. This comprehensive bill is poised to touch nearly every American, regardless of their financial status or age. Let's break down the key elements. Tax benefits. Among the most notable tax breaks introduced are new deductions for middle-income seniors. Seniors who are 65 and older with incomes up to $75,000 per year, or $150,000 for married couples, now qualify for a maximum $6,000 deduction, which doubles for couples. However, the deduction amount phases out for higher earners, disappearing entirely for those earning more than $175,000 or $250,000 for couples. Healthcare changes. Although Medicare is a lifeline for many seniors' healthcare needs, it does not cover long-term care. Consequently, many elderly patients turn to Medicaid, which supports a large portion of the nation's nursing home population. Yet, the proposed deep budget cuts to Medicaid could lead to the closure or downsizing of some nursing homes, potentially reducing available long-term care options for seniors. Family support improvements. For families with children, the new legislation offers a variety of enhanced benefits. Child tax credit. The child tax credit have been increased to $2,200 per child and is adjusted for inflation annually. Yet, non-citizens, even with U.S.-born children, are not eligible. Furthermore, approximately 25% of children will not benefit from any changes due to their low incomes. $1,000 infant grants. Starting from 2025 to 2028, every child born will have a tax-deferred investment account with a $1,000 government contribution, with additional contributions possible from parents, employers, and nonprofits. Adoption and parental leave. The adoption tax credit has increased to $5,000, adjusted for inflation, and programs providing parental leave and workplace daycare are now more accessible for companies to offer. Tax reductions. Absent this legislation, the temporary tax cuts that were part of Trump's first term would have expired by year end, leading to higher taxes for many. The bill raises the standard deduction to $15,750 for individuals and $31,500 for married couples, maintaining the lower tax rates introduced in 2017. Cutbacks in benefits. The bill includes considerable reductions in healthcare and anti-hunger programs, like the Supplemental Nutrition Assistance Program, SNAP. Changes to Medicaid could disqualify recipients if they fail to fulfill new work requirements or submit required documentation about their activities, such as working, volunteering, or studying at least 80 hours a month. Even exemptions like pregnancy, disability, or caregiving duties require submission of appropriate documentation. Ultimately, the cuts to benefits disproportionately impact low-income households, who might end up losing more in benefits than they save in tax breaks. For example, a single parent earning $20,000 annually might save $750 in taxes, but lose over $1,600 in benefits. Additional tax incentives. Families not relying on government benefits are likely to see the most benefits from the tax cuts, including exemptions on certain overtime earnings. With the new rise in the SALT state and local tax deduction cap from $10,000 to $40,000 for households earning below $500,000, those in high tax states stand to benefit significantly. Data suggests, however, that the rich have historically reaped the most advantage from the SALT deduction limits. Among middle-income earners earning between $53,300 and $92,100 annually, the average tax saving is estimated at $1,510, according to the Institute on Taxation and Economic Policy. Significant tax cuts for the wealthy. While the financial benefits for low-income families are modest, high-income households will see the majority of the tax cuts. According to an analysis by ITEP, 72% of the total tax savings will benefit the top 20% of earners, specifically those making more than $153,600, and over 20% will go to the top 1% who earn over $916,900. Health insurance reductions. This legislation introduces the most substantial cuts to Medicaid in its history, around $1 trillion, potentially affecting the healthcare coverage for at least 17 million Americans. New work and reporting requirements will be implemented for Medicaid recipients earning between 100% to 138% of the federal poverty level. Healthcare experts explain that ensuring proper documentation will become more burdensome and could lead to people losing coverage if they cannot keep up the paperwork or are unaware of the new requirements. An additional eligibility check every 6 months, beginning in 2027, might also lead to people unexpectedly losing their health coverage. Tax exemptions for tips. The bill follows through on Trump's campaign promise by allowing workers earning up to $150,000 per year, or $300, for couples to exclude up to $25,000 of tip income from taxation. The Treasury Department is also tasked with defining professions where tip income is routinely expected, ensuring only those workers enjoy the tax exemption. Disappearance of tax credits. Individuals without Social Security numbers, typically non-citizens, can no longer receive child tax credits, nor take advantage of tax provisions related to tip and overtime pay or certain educational credits. Education loan revisions. Trump's new legislation ends the student loan forgiveness programs introduced during the Biden administration. It also introduces new repayment standards with fixed payments based on income for a span of 10 to 25 years. The plan offers interest forgiveness for timely payments and match payments toward the principal. Loans with remaining balances will be forgiven after 30 years. Jeff Stein contributed to this report. Correction. An earlier version of this article misstated the average tax cut for households earning between $53,300 and $92,100. It is $1,510, not $1,590. It also clarified that 72% of the tax cuts will benefit the top 20% of earners rather than 69%. Follow updates on Trump's presidency. Keep track of Trump's policy promises and legal challenges to his executive actions. Stay informed about how Trump's administration is shaping economic policy, trade, relations, and government regulations. Additionally, you can follow developments concerning tariffs and the federal workforce, and learn more about the Trump administration's impact on these topics.